We are bullish on crude oil, and I'm going to tell you why on this video. Hey everyone, the professor here, and welcome to the crude oil technical analysis. Now, I'm going to be showing you why I am bullish on crude oil. I'm going to be popping it to the chart. I'm going to be giving you zones, and I'm going to share with you something that has been open in the charts for about 2 weeks. And I think this will be the week it closes. Okay, so let's do what we normally do. Let's find our floor here. And again, we're going to mark this up as weekly level. Okay, remember when I mark up weekly level, that can end up being support or resistance depending on where price is at. We're going to go up here. We're going to mark up this weekly level. And again, you can do this on your computer as well. And then we're going to mark up this area here where price recently rejected as a weekly level. Okay, so we have our immediate levels set up on the weekly time frame. Now we're going to drop down into our day time frame. We're going to start looking at price action and kind of giving you some areas and why we are so big on trading Fibonacci levels inside of our trading group, especially on the higher time frame. So if we focus in here on this area here, let's go ahead and grab a Fibonacci retracement. And this is what we took our first buy once we had seen this retracement level coming down. It came down perfectly towards that 61 to 88 area. This is a place that we historically sit on, especially with crude oil, as we are looking at price action for possible reverses, because that allows us to look at long positions, something from like this, always back up to the zero. And we know that our 100 line will, or 100% will kind of be our area that we would want to consider either changing from buys to sells or closing out the immediate trade. Now, at the end of today's video, I'm going to be linking a video that's going to teach you a lot more on Fibonacci levels specific to crude oil. So make sure that you check out that video. That'll be popping up at the end of this video. Okay, so now that we got rid of this one, just kind of show you there, let's go ahead and remove the Fibonacci levels because again, this is something that we are constantly doing inside of our trading club. Now we looked at the next opportunity for a buy once we saw price coming down. And again, we just grab our little bubble and we move it right back to that 61 to 88 area, where again, if there is a pullback or a retracement level that closes below the 100 level, then we know that needs to be our exit. And we possibly change our strategy to then look for price to go down and go from buys to sells. Okay, so now that we have our day time frame here, let's go ahead and look up and mark up some of these levels. And at this point, once we get to the daily, I'll go ahead again and I'll make this a daily level. I don't want to call it support or resistance because again, support turns into resistance and resistance turns into support. Okay, so we definitely want to mark that level. And then we also want to mark this level right here where we've seen price react on a couple of occasions on the daily time frame. So we'll mark up these levels. And again, whether you're trading on futures, whether you're trading on Forex accounts, you can mark up these levels, even though your price might be different than the chart I am using, which is the WTI light sweet crude oil future spot. Okay, you should see these type of patterns happening on your candles. Keep in mind, I am on the daily time frame right now. So as we look at the daily, obviously we're going to have a couple of areas that we're going to be looking for. We are going to be looking for number one, price. Okay, then we got this bubble to close above this 72.30-ish area if we are going to take price back up to the next major level up in this particular area right in here. Okay, now even though we're sitting at a weekly level at 78.12 or so, let's not discard this level right here where you might run into some friction, okay, because we've seen price react there on a daily level. And as we drop down time frames, you're going to see how this works beautifully. Okay, so we are here at this level right in here. So we're going to see what happens with price action at this level. So as we drop down to the 8-hour time frame, you can clearly see here that, over the last, you know, 12 to 15 8-hour candles, we've kind of been in this ranging zone between 68 and 72. Okay, we can clearly see here, we kind of started back in this range back on October 14th. and we closed on Friday, the 25th of October, with a doji candle here as we are wrapping up the month of October 2024. Okay, so now I'm going to show you something in the chart that has been open for 2 weeks, and historically, these gaps close. Okay, so if I grab a call out symbol, you can see right here in this area, we have an open gap. Okay, and this gap here was created back on Friday, the 11th, when the market closed, and when the market reopened on Sunday, October 13th, price never came back up to fill in this area. And you're going to see it a little bit clearer right here as we move down in time frame. Okay, so that is an open gap that is currently open both on my broker and also on folks that are trading here on TradingView. And this is something that you may want to look into your broker to see if that open gap still exists right around the 74.92 area down to the 74.18. So it's about an 80-point gap that is open right now. Okay, so I've had a lot of people message me and saying, hey, Armando, could you clarify a little bit about what the gap means? And it's just very simple. I'm going to take you back to the charts in just a minute, but think of where price closed in that recent example on a Friday, and then where price opened on that Sunday. The difference of pricing, that creates a gap. Unless price opens and closes at the exact same price point, the markets routinely, daily, will make some type of gap, especially on Sunday after the markets have been closed for about 48 hours. You see gaps historically on many, many charts within the different symbols. So that's all that gaps are. If the price opens lower than where price closed, then we consider that to be a gap to the downside. If price closes above where price closed, we would consider that to be a gap to the top side. So in this example right here, which is a real life chart, we can see here that, again, that price closed at around 74.96. Price opened at 74.06. Price never came back up to fill that gap. So this open area is considered a gap in the market. And historically, with crude oil, historically, they usually close within 48 to 72 hours. But again, I remind our members all the time, because we trade these gaps, that there's always a chance that crude oil and other symbols can stay open for a few days, a few weeks, even a month in some cases. So if you are going to take gap trades, we always under leverage the gap trades, and then we look to stack our positions. And we have certain rules that we have before we actually enter the gap. And crude oil is a good example of this, where crude oil usually runs away for a while once the market opens, and then we start looking for better pricing, right? We want to buy when it's lower, and on the flip side, if this was an open gap to the top side, we want to sell at the highest point possible. So again, we have strategies for this, and something that we encourage you, if you have not yet checked out our trading club, you can go down to the website below, the Professor Trades, and check it out. So this is one of the main reasons why I'm bullish on crude oil, aside from the global tension, aside from the Israel-Iran conflict, right? We do have an open gap that I do expect to fill here probably over the course of the next 3 to 5 days. And it could very well be that when the market opens on Sunday, that it could be because of the conflict and because of the bombings that we already gap up on crude oil. And so if we do gap up substantially, in some cases, where I have seen is they open gap to the top side, they run the gap, they run the price to close the gap, and then at that point they have to come down and now fill the lower gap. So again, there could be multiple gaps on one particular symbol. So again, those are things that if you've never traded the gap, if you're unsure, then don't do it. Unless you're with guided folks or in a community with folks, don't do it on your own, because I would hate to see you put yourself in a bad situation where you're risking too much margin or too much leverage, and then you don't understand how to manage that gap trade. We have strategies for gaps that we share inside of our trading club. Okay, so now that we understand what the gap is and we know where price is, we are about roughly, 344 points, however that equates to ticks on futures, away from actually closing the gap. So again, this is something where I have been talking to our members all week. I have not sold crude oil in over 2 weeks. I am only looking for those buying opportunities in crude oil with some of those Fibonacci levels that we are talking about. So we are going to be moving up on time frames, but first I want to go ahead and draw this trend line right here just to kind of give you a visual that we right now are kind of walking up this trend line on the 4-hour time frame. But again, as we come across areas of resistance, as we are about to right up in this section, again, we're going to look for price kind of to do this, to close above, right? Possibly give us a small retest and then go up to our next daily level toward the top side. And again, that would put us in an area that we would look to possibly close the gap under that particular scenario once we break above the 79, or sorry, the 72.22 area. So let's drop down to the 1 hour so you can get a visual on that same trend line on the 4 hour. Okay. So assuming what's going to happen on Sunday, we don't know whether we are going to gap down, right? And then if we gap down, we are going to be looking for buys down in this area. If we gap up in this particular scenario, up in this area, okay, two things will happen. Number one is that will create a brand new gap in any of these scenarios. If we gap up, we'll have a new gap between here and here. If we gap down, we have a new gap between here and here. And then, of course, we have that existing gap still sitting here for over 2 weeks. So where we open up on Sunday will be very interesting. I think if we end up gapping up in this area, then they'll just run it, close the gap, and then we'll start looking for possible sell opportunities. Not right on Sunday. We'll probably wait a couple of days, depending on what kind of news is happening with the tensions over in Israel and Iran. We'll obviously take a look at those fundamentals, which with crude oil, you obviously cannot just completely ignore, right? We continue to trade our zones, but we can't ignore the fundamentals, especially when it comes to crude oil. So my overall view for crude oil is that we will stay bullish on crude oil. We will continue to buy any dips on crude oil until that upper gap is closed. And again, if Sunday gives us a gap to the top side, then again, we will not run to try to grab the gap on the lower end. We will wait to see if they fill the higher gap first. Hey, I hope you got some value on this video. If you did, smash that like button for me. If you are brand new and you want to become a better crude oil trader, or you just need support, or you just need someone who's going to give you constant feedback on crude oil, which is the main commodity that I trade, not the only one I trade, but the main one that I trade, you definitely want to subscribe and also turn on those notification alerts because I'll be doing a lot more content, both on the long form and short form content, just to continue to give you value, focusing in on crude oil. But if you jump into our trading community, which you can still join for less than $1 a day, and that pricing will be going up at the end of 2024, you can come on in and you can trade the indices with us. You can trade Forex with us. And if you're brand new, we recently have a couple of college students that started with us. We're going to hold your hand. We're going to walk you through the process to get your accounts open, to get you set up, to understand what trading is all about, and then to get you into some trades early so that you can begin to grow your account with a growth plan that we are going to give you so you do it the right way and learn from the mistakes that many of us made early in our trading journey. Okay. Thanks for watching. Enjoy the rest of your weekend. If you're watching this during the week, enjoy the rest of your week. And hey, don't forget to be kind to someone today or tomorrow or the next time you run into a stranger or someone on the streets. We have a lot of negativity in our world today, and we just need some people to share kindness, say hello, open a door. Men, let's bring back some chivalry into society, and let's not let money and money and money be the only focus on why we're trading. If you're not a good steward, if you're not giving back with the money you earn, if you're not tithing in church, then you are being greedy, and eventually that will catch up to you. So let's make sure we do our part, because at the end of the day, we can't take none of this with us. All we can have is our faith and our family, and that should be the reasons why maybe we want to trade, but we shouldn't go into a mindset of trading just for money and then forget everything else, because then you are going to struggle in other areas. So make sure that you focus on really what matters, which is your faith and your family. Thanks for watching.